Auto yesterday. Let's have the Nifty Auto chart for yesterday and see that kind of 3% uptick, 3.3 to be precise, is something that we've seen. Top sectoral gainer by a margin. Kunal, your take on Nifty Auto and how is the chart for TVS shaping up now?
I think it's an excellent sector move. 2 consecutive quarters so far, second consecutive running quarter for the sector, in terms of revival. What's more very interesting is, the previous year, calendar year from September 2024, when the sector, start to go into a correction, it was a huge correction for the auto index. I think we corrected from 28,000 levels thereabouts to sub 20,000 mark. So it's almost like a 30% kind of a cut which the auto stocks or the auto sector had seen. And I think to recover the entire 30% in a matter of the next 2 consecutive quarters indicates that this could be a very strong, up move. So we generally say a V-shaped recovery generally takes a lot of time for stocks and sectors, when they come back into a recovery phase. But if it happens very quickly and the same time span in which the sector or the stock had gone through a correction, which means that the upside potential is significantly high and still left for that kind of a sector move. So I think in that context, I would strongly believe that many of these auto stocks have, kick-started a major multi-month, multi-year up move. I think in that context also TVS Motors is something which starts to look attractive. Again, it's been a more consistent kind of a chart, but again, compared to all of the other names, it's very difficult to just about handpick 1 or 2 names from the entire auto pack because most of the stocks are looking very, very attractive.
Okay, so that's a take coming in on Nifty Auto. And after the kind of run-up we've seen, stocks are still looking attractive. So that's a take coming in from Kunal. We also have Aditya Agarwala of Invest for Edu joining us on the show. And Aditya, hi, morning. First up, give us your overall read-through of the market and the kind of resistance that we're seeing building around that 24,800, 25,000 mark. We're not being able to surpass that. Given today is the Nifty expiry, what are the levels that you're watching out for today, and what is the resistance you think the market is going to have a tough time breaking?
Morning, Sneh. Thanks for having the show. Markets continue to remain in that narrow range, which we just spoke of, 24,800 to 25,000 on the upside is acting as a hurdle at the moment, and on the downside, 24,700, 24,600 is acting as a support. Overall, I don't see too much of a selling pressure coming into the market. If anything, my sense is give it some time and you will see an upside breakout in the market beyond 25,000 and you will see the levels of 25,200, 25,400 from a near to medium term time horizon. So overall, my sense is both the Nifty and the Bank Nifty should see higher levels from here on. On the Bank Nifty, 54,500 is acting as an immediate resistance. Once that is taken out, 54,500, my sense is 55,000 on the Bank Nifty will soon be also taken out. So overall, it's a good time to start building positions both on the Nifty and the Bank Nifty. The volatility index is also sitting comfortably, so there is no major pushback from the volatility index also that I foresee. On the Nifty, like I mentioned, 25,200, 400, something that I mind could be seen this week or next week. And on the Bank Nifty, 55,000 to about 55,500 is something that I'm looking at. So both the indices are looking interesting. One should start building positions both in Nifty and the Bank Nifty from a medium-term time horizon.
Okay. And Aditya, what do you think within the Bank Nifty is going to be the contributor, or do you think it's going to be a broad-based move within banks?
I believe it's going to be a broad-based move, Aisha, and then especially the large cap private sector banks which have underperformed big time. It's time for them to make a comeback. Names like ICICI Bank, Axis Bank, HDFC, even Kotak Mahindra Bank for that matter. All these 4 banks, my sense is they will start to look attractive in the moment Bank Nifty starts to trade beyond 54,500. And they are offering an excellent risk to reward as well at current levels. So case in point being an Axis Bank which has seen a correction after the results offers an excellent risk to reward at current levels. One can place a stop loss somewhere around 1,040 and look for a target of 1160 on the upside. Similar is a chart setup for Kotak Mahindra Bank as well for a target of 2150 on the upside. And HDFC Bank, which is not corrected also and has done much for itself, my sense is can cross levels of 1,000 in the near term. So all 3 banks look interesting. With the small stop losses on the downside, one can definitely create a long position here.
And Aditya, amid a market like this, the kind of setup that you're indicating towards, which stocks have made it to your radar and what's looking attractive for a fresh buy?
So a couple of them. One is from the gold financing companies that we were just talking about, Manappuram Finance. That looks quite interesting to me from a trading perspective. At current levels, I would be a buyer in this stock. Stock has been making higher highs, higher lows. a very good looking chart set up for a target of 315 on the upside with a stop loss on the downside at 282. I recommend a buy on Manappuram Finance. The second is AB Capital. Again, this is one stock which has done phenomenally well for itself, and my sense is there is more room on the upside from current levels. So one can go ahead and buy at current levels with the target of 3110 on the upside with the stop loss at 278 on the downside.
Right, okay. Let's just take a look at some of the other buzzing stocks. And of course, we've flagged off that Infy, because the board is meeting on September 11th to mull a buyback. That, of course, is going to be one segment which is going to be in focus. But TVS Motors as well. After a slew of price cut announcements, now TVS Motors has also announced price cuts, which are going to be in effect from September 22nd. There's IRB Infra, their August gross toll collection has come in higher by almost about 12% on a year-on-year basis. And then Hutco, which has signed an MOU with MMRDA in Maharashtra, that's the other stock which is also going to be in focus. But Neeraj Diwan as well joins in on the show right now. Neeraj, hi, morning. Just discussing Infosys right now, what the buyback could mean. And as always, do you think investors or traders should be looking at some sort of support coming in post the buyback on the stock price?
Yeah, good morning. Two things. So one, the last buyback in perspective, it was at, I think, 2-3 years back at 1850. So the stock was not able to do much, if you see the medium to long term, view after that. But, now because valuations are better than what they were at that level, and the stock has been, at these low levels for quite some time. So depending on what premium which is there on the buyback, there will definitely be one, arbitrage opportunity, which will be for the investors. And, the stock should make a base at these levels because valuations are attractive in long-term perspective. If you see historical valuation. So there the support should be, and short-term, arbitrage move can happen because of the premium that will be there with the buyback.
Okay, so that's the take on Infosys. But Neeraj, hi, morning. A lot of these stocks from the railway pack have been buzzing off late. And today a stock that could be in focus from this entire group is RailTel. They've bagged an order for 700 crores from Education Council of Bihar. And this is just one of the many orders that they have bagged recently. What's your take on the kind of order win announcements that we're hearing for a lot of these railway companies? And where do you think this pack is headed now?
Yeah, actually, this pack has consolidated a lot because we saw a good rally happening last year. The stocks had become very expensive looking at 2-3 years, forward-looking valuations also. So I think that consolidation was required, which we saw for a very long period. Stocks had corrected, then they stayed low. RailTel also corrected a lot from the highs. Other stocks also in this sector, which have, I think now, looking at the order win situation and looking at the valuation, I think there is definitely a case for investment, stock-specific investment in railway stocks. I think from these levels, you can see some upside potential if you're looking at, year and a half from these levels. So I think order books are again improving, valuations have become better. So that should be a case for a re-rating again for the stock.
Can I just want to get back to IT because you've been mapping how stocks typically behave post-buyback. And while, of course, buybacks is not new to nature of most IT companies, given the kind of sizable cash that they sit on. And, buybacks in the nearly last 2 years, we've seen from all three names, TCS, Infosys and Wipro as well. But tell me, what's the typical stock move post-buyback?
It's very interesting. We go back to history because that's the best way to try and understand how sectors and stocks move. Infy, the same buyback news was there on 13th October 2022. The stock closed at 14.19, 14.20 at that point of time. Subsequently, post the announcement of buyback, the next day when the stock opened up, it was almost like a 5 to 5.5% up move into the stock price post that buyback news. But the most interesting part happened beyond that. From 13th October to say the next 1.5 odd month, the stock climbed up to almost 1640 plus mark. So that's almost like a 240 point jump into the stock price, and that was most like a linear up move for the stock price. And prior to that, the stock went through a very sharp kind of a correction. So the setup is very, very similar to where we are right now. the IT stocks have gone through a phase of correction. We can expect that if history repeats itself, then we can expect at least a 4 to 5% kind of a gap up move for the stock price. But most importantly, the stock forming a major bottom could be, I think, the icing on the cake.
Kunal, you were earlier talking about as to how 30% of the large cap Nifty weightage is not wanting to budge and participating. Could IT be that trigger point?
Yeah. So I think if we see that move, starting off for the IT stocks today, so I'm assuming that it should not be just a solitary move for Infosys. Yeah. It should trickle to the other large cap stocks and the tier 2 large cap names from the IT pack. But if we see that happening, and if the Bank Nifty also balances out itself, it should not be like a one sector up move and the other sector goes into a correction. But even if the Bank Nifty balances out today, I think a strong indication that the markets are getting ready for a breakout about 25,000 mark.
But Neeraj, are the fundamentals in place for IT? I mean, valuation aside, the fact that they've been most underloved, under-owned right now, but are the fundamental markers in place for a broad-based move within IT?
I think what Kunal was also saying, I think they are making a base now. So to make a base for a negative move from these levels is unlikely. I think they may not move up to that extent immediately, but I think consolidation phase has already happened. So there's a case for accumulation in these stocks where valuations are again attractive compared to historical valuations, and plus you see last quarter results also, they were not as bad as people were expecting them to be. So if you get a couple of decent quarters, maybe that growth that we're looking at may take another 2-3 quarters to get more clarity in what is happening in the US. That's a very big market for them. But I think short to medium term, I think there is a base in place and you may get decent returns from these levels if you are investing for a couple of years. So I think there is a case to accumulate these stocks.
Okay, so that's on IT. So that's the take coming in on IT on the fundamentals as well as Kunal's take on the technicals too. But on that note, we'll slip into a very short break and talk about more stocks and sectors on the other side.
Spread out to the rest of the IT pack as well, and then that rubs off on the rest of the pack too. But the other pocket of the market which has been holding out very well has been autos. And Neeraj, clearly the GST chair, the price cut announcement, all of that is adding to the optimism. But tell me, is now the time to really buy afresh into some of the leadership names like an M&M, Eicher or Hero MotoCorp, for instance?
Yeah, see, last couple of months, we had been recommending stocks like Bajaj Auto, Hero Motor, because they had corrected after a bad quarter and bad 2-3 months. So they were the case to buy these stocks. Bajaj Auto was languishing around 8,200, 300, Hero Motor below 5,000. So those were the right time because you were getting, besides the GST cut, you were getting indications of that there was a good monsoon, interest rate cut. So there could have been a revival for the demand anyway. So that was a better time to buy. But then, even now, I don't think if someone is see in the short term, because stocks had moved up, so there can be some consolidation, there can be some slow movement, from now till, maybe some another 15 days, 1 month, 2 months. But if you're looking at a longer term perspective, stocks like Mahindra & Mahindra, TVS Motor, has proved time and again that the kind of performance that they have shown quarter on quarter, year has been tremendous. So that may continue. And of course, the GST cut will give them a boost as far as demand is concerned. So there may be some, slowdown this quarter seen because of the delay in purchases by some buyers because of the GST cut which is coming end of the month. So that may have some impact on the current quarter. But going ahead, I think the festival season will be very good for them. And, end of this month in October, November can be very good for them. So looking at that kind of demand coming to them, I think even at these levels, if one very longer term, you can invest into these stocks.
Okay. The other, of course, debate in the market has been the fact that premium turnovers and market share for names like or exchanges like BSE has remained positive. And this despite the fact that, there were new expiry dates. BSE gets Thursday now. In fact, I caught up with the MD and CEO of BSE, Sundaraman Ramamurthy, just yesterday for an exclusive chat. And here's what he had to tell us about how the expiry date changes are impacting the volumes right now.
We had single contract of weekly expiry per exchange with the option to choose the expiry day. Since Thursday was chosen by the other exchange, I chose Tuesday. I was very clear at the time. No longer my product will be expiry day product. It will become an active product on all days. And it became. And when it becomes active across all days, this is the time to push the envelope to the other days of the week, other expiry days, next week, next to next week, and to the next month. We started doing it. From nothing there, we reached around 3 to 5% of volumes coming from non-expiry week volumes. Not this week, next week, next to next week, month. Now the third thing happened. Since the other exchange wanted Tuesday, I think for once I wanted it to settle down. So we gave Tuesday and took Thursday based on the voice of customers. My market participants felt Thursday is a better day because Thursday has been the expiry day for a very long time in Indian derivatives market. Mentally, they are tuned to Thursday. And as against the talk of 2 days, 3 days versus Tuesdays and Thursday, the market participants told me, if it is Thursday, actually it is 4 days you get. So you should take Thursdays. It's early days, just one expiry has gone. We are waiting and watching. But what we are clearly seeing is the market behavior taking next week, next to next week, and monthly options. This is what I call as deepening of market. I need to deepen to get more depth into whatever product we have. In all these parameters, we are doing well. Of course, it's human tendency. Dil mange more. Whatever you do, you want to do even better and even more. So we will work hard towards it.
So more volume buoyancy.
More towards non-expiry week, so that it is deepened and broadened. The product has to be very strong.
Okay, very interesting conversation lined up. Stay tuned to ET Now for that entire chat at 9:50 a.m. today. But while we're talking about exchange counters and exchange related stocks, Aditya, weigh in over here on the charts of some of these names like BSE, Angel One, CDSL. How are they shaping up on the charts, and are they looking like an attractive fresh entry right now?
Absolutely, Sneh. In fact, after a bit of a correction and a consolidation, all these stocks are looking quite interesting. To talk about exchange plays, BSE, MCX, and also a CDSL, all three stocks look quite interesting to me. In fact, if one is looking to get into these names, these are good times to buy BSE at current levels. Stock has taken support at the 200 DMS, completed its fourth corrective wave. From there, it's starting its fifth wave upmove. So from here on, my sense is stock can easily test levels of 2,800, 3,000. That's the immediate targets on BSE. And if one holds on to it for from a longer term time horizon, stock can also test levels of 3,600 on the upside. Talking of MCX, that too has seen a bit of a correction and consolidation, can see levels of 8,500 on the upside, and same holds true for CDSL as well. One should clearly look at adding the stock in your portfolio for a target of 1,800 to 1,900 on the upside. This is as far as the exchanges are concerned. You can also look at some of the brokers which look interesting, like an Angel One, which has been making higher highs, higher lows, and after the recent correction that the stock posted, it offers an excellent risk to reward as well. So with the stop loss just around 2,200, the corner, one can actually look at initiating fresh long in Angel One as well for a target of 2,700 on the upside.
Okay, so that's the take on some of these exchange-related counters. Neeraj, what is your take on this as well? Because the kind of movement we've seen in some of these stocks has been quite a lot. be it BSE or, for instance, Angel One, the numbers that we're seeing coming in on the monthly basis, the business update that they provide, that has also been fairly decent. What's your take on some of these, and what would be your preferred bet when it comes to the entire capital markets theme?
I think the stock that corrected because of the, talk about weekly expiry changing to fortnightly or, reducing the number of expiries. So there were a lot of reasons for the stocks to correct. So I think though that for the time being is not, as long as that is not coming, I think volumes will pick up even for BSE, even if the move is happening to Thursday. Volume will slowly come back and volume should be normal again for BSE. So stocks like BSE, I like BSE also at these prices. I think it makes a case to invest BSE for a little long-term perspective. And besides BSE, so these mutual funds, listed mutual funds like NAM, Nippon Asset Management, I've been very positive on, and that stock has also performed. And some of these stocks like CAMS, which is sitting at a 40 TTM PE, which is also decent, and it's corrected a lot from the highs. So if one has to make a basket, you should have top one stock from each segment of this stock exchange related stock, the CAMS, BSE, NAM. I think these should be good investment for a little long-term perspective.
That's that on some of the capital market plays. Just looking at the screen, and while yesterday, of course, it was banks, consumption, all of those segments felt hard. The one segment which continued to hold out was, of course, autos and metals. That also is showing some underlying strength. I mean, from the word go, the likes of a JSW Steel, Tata Steel, SAIL, etc. were holding out well. And some of these names actually managed to cling on to the gains. Kunal, any interesting trend that you're picking on metals?
Yeah, I think so large cap traditional stocks, Tata Steel is something which looks very attractive. Yesterday, there was a point where Tata Steel opened gap up, but then the stock corrected from 173 levels to 171 thereabouts. But JSW Steel was apparently the stronger one, which managed to withstand even the last half an hour, last 1 hour of a major market correction, and close quite positive. Almost I think, if I'm not wrong, at a multi-week high already, the stock crossing about that 1050, 1100 kind of a resistance zone. JSPL and Hindalco, I think these are the other two names which have also, I think, have started to look very attractive in terms of the potential continuation up move. The only volatile stock over here has been Vedanta, because that's a stock which has been in the thick of news flow and generally is more of a diverged stock with respect to the entire metal sector. So I think that's the only odd stock in the entire pack. But I think other than that, I would actually believe Tata Steel and JSW Steel are the two strong bets at current levels.
Okay, so that's the take coming in on some of the stocks looking good from the metal pack. Aditya, I want to discuss ABFRL with you. Now, recently there's been a demerger and it's lifestyle arms, that's ABLBL has been demerged. Today we have a fresh note coming in from Morgan Stanley where they've initiated overweight on the lifestyle business, and they have hiked the ABFRL view to an overweight now, and target price has also been hiked, so there's an upgrade coming in on this front. Now, limited chart history for ABLBL, of course, but Aditya, what's your take on ABFRL? The kind of move that we've seen lately and this entire GST push for consumption, how do you think is going to play out for this stock, and at least on the charts, how is this stock shaping up?
So if I slightly move to a higher time frame chart structure, it's more of a consolidation that the stock is posting, and it's a very broad consolidation that I'm talking about. On the downside, 70 happens to be a good support area for the stock. On the upside, 120 to about 130 happens to be the hurdle for the stock. Intermediate trend, my sense is still bullish from 70 odd level. Stock has bounced back on good volumes. So my sense is this up move is likely to continue at least to levels of 105, 110 on the upside, and that is taken out. 130 can also be seen. So one can actually look at buying into this stock at current levels with a stop loss somewhere around 85 to about 80 on the downside. That's a strong support area. And look for a target of 110 on the upside. That looks like a likely target in the near term to about medium term. Overall, it's a healthy looking chart setup as of now because the stock has turned off from the lower end of the consolidation zone.
Okay, well, it's stocks, and then there are other asset classes like gold. Yet again, a fresh all-time high, Kunal, when you thought that can't move up any further than this.
No, I think I was of the belief that this could be a brilliant year for both the asset classes, gold as well as silver. In fact, we were discussing this at the start of the year also, that this could be a breakout year for both of these asset classes, because these, both of these commodities are coming out of a major downtrend. I think silver, if I'm not wrong, almost came out of 11 year of massive consolidation or an underperformance. $32, I think, or thereabouts was the resistance in terms of dollar prices. Rupee terms, I think it's already at 1,23,000, 1,25,000 the last I'd seen. Gold almost at 1,10,000 on the rupee terms. But again, when you look at the dollar chart, when you look at the rupee chart, there is no sign that the asset class has gone into a overbought mode, at least as of now. And even if it does, the tendency of the bullion asset classes to remain at overbought levels for a prolonged bit of time after such kind of a steep run is pretty much on the higher side. So I sense that the year or the calendar year finish for both these asset classes, gold and silver, should be on the much upside levels.